Welcome back. Another stock you should keep on your radar today is Wipro. It's down nearly 1%. All of you would have read in the papers today that Wipro has announced that the freshers who will be joining Wipro now are going to be given sharply lower salaries. Earlier, the freshers who had committed to joining Wipro were promised salaries per annum of 6.5 lakh. Now they're saying, join us, but you have to join us at 3.5 lakh. If you don't want to join, then don't join. So this is a sharp 50% cut, right? And everyone's wondering what exactly happened, because this is very bad, public relations, PR. Optically, it doesn't look good, because how much are you going to save by cutting down on the fresher salary? Anyway, the salaries are not very high to begin with. A bulk of the hiring perhaps has already taken place at the beginning of the year. So how much are you going to save, right? And it just goes to underscore the demand and the supply side situation that IT companies are in. Remember, IT companies make plans to hire in advance. The offer letter is given to you well in advance. At that time, you're anticipating a certain demand environment. That demand environment has changed in the last 6 months, and the supply side situation has also changed drastically. Now remember, Wipro per se, their growth is not very high. In fact, in Q4, they're guiding for the possibility of negative growth. Their guidance for Q4 is minus 0.6 to 1% growth, right? So best cases, they're going to see flat growth, right? So if you are seeing flat growth, then why even pay that balance, why even pay, an extra bit of salary to the freshers? That's what analysts are saying. Also, their margin performance has been lesser compared to peers. There you have it. Wipro's margins are lower than peers. So according to analysts, that at a time when growth is scarce, growth is moderating, the company is wanting to focus on their margins, which is why they are cutting costs wherever it is possible. On the flip side, that's on the demand side. On the flip side, attrition has been moderating for the company. Their utilization level is the lowest in the last 12 quarters. The company said, we've hired a lot in the last couple of quarters. Our employee headcount has gone up by 45% in the last 10 quarters. We've increased in size, and now we want to utilize the existing bench because that is currently underutilized. So it's a combination of both those factors, but just purely optically, it doesn't look good when any company comes out and goes back on its promise of the salaries that they had promised to the freshers, because ultimately, how much can you save? Mehrboob, thoughts on these kind of headlines? Would you be worried that perhaps this is a sign that demand is slowing down much more than what the street was earlier